So there's no incentive for me except for your success. That's it. That's it. That's all I want to see you do. I want to see you do well. I want you to send me emails occasionally once in a while. Say, hey, look, this is what I was able to do. Thank you so much. I was able to help this person. I'm doing this over here. I'm building a hospital. I put a wing on the hospital over here. I'm putting a orphanage together here. I've funded this entire village of individuals and I've gave them food for the next 90 days. That's treasure to me. I don't give a shit about online clout. I don't care about that. I want you to be able to feed yourself and your family and help others and be passionate about doing that. And most of you wouldn't even think doing that because you can't hardly make your own bills right now. But once you are able to do this consistently and you can make another stream of income and you decide when you're going to do it. And small losses like a flat tire going to work, they're inconvenience expenses. It's not fun. It's irritating. That's what losing is in trading. That's exactly what it's like because it's measurable. You know exactly where you're going to put the stop loss. You know why, if it goes there, you're going to get stopped out. And you want that to happen. If you're wrong, you want that to be the very mechanism that prevents you from losing more. How do I get over the fear? You go through it. You just walk forward. That's it. You just keep walking forward. But if you're walking forward with no stop loss, recklessly over trading, adding more contracts when you're already down, trying to dig your way out of it, then you get results like you see some of these YouTubers out there doing. That's not what you want to do, folks. That's not. Have a very easy, low-hanging fruit objective. Something that's easy, a target that can be easily reached. I think, and somebody that's been trading for a while probably snickered earlier when I said 2.5 handles. Okay, 2.5 points. 2.5 points is nothing. But high-frequency algorithms will fire in there all day long, going up and down in the same day, doing that all day long, and make, well, a lot of money. But they're losing too. They're getting that ebb and flow, up and down, up and down, up and down. They're not always winning, but they know over the course of the day, ripping into that marketplace over and over and over and firing in there constantly, catching fluctuations of 1.5, 2.5, 3 handles. Once it gets there, they're out. They're not in there trying to get the daily range, average daily range. They're not trying to run for buy side liquidity. They're not trying to run for sell side liquidity. They're just in there getting fluctuations over and over and over again. They're capitalizing on that minor fluctuation. Algorithms that are engaging the market. I'm not talking about the algorithm that the market engine uses for price delivery. I'm talking about traders, entities on the outside that are trying to capitalize on price fluctuation. So don't be discouraged by 2.5 handles as, oh, that's not worth my time, bro. No, you can do a lot. You can do a lot with that because you can take that and scale it and say, okay, I know I don't have a whole lot of time to be doing anything in the marketplace because my schedule won't permit it. Okay, fine. But you can find 2.5 handles. You can get that. Not that I'm encouraging it, but on a smoke break at work, a bathroom visit while you're at work, while you're walking through the mall, while you're waiting for your wife to pick out the shoes that she doesn't need, like I have to do sometimes. Okay, I can't stand being here. She's going to ask me, do you like these? Man, why are you going to put me in a situation where I'm going to lose no matter what? You know what I'm talking about, gentlemen, right? I have to be distracted from that. It'll drive me crazy. So I'll go on the phone and there it is. I'm in Trading View messing around with something. 2.5 handles is easy. That's literally like fruit hanging on a tree that you just walk up to and grab a hold of it, pluck it off. Whenever the fuck you want. But 5 handles is what I want you to focus on. That's your goal. In your journal, that's what you're looking for. Okay? I guess it would be, equivalent to a pip in Forex. I'm not saying that we're going to be looking for 5 pips in Forex. To me, unless you can get 10 in Forex, because you have a spread that you have to beat in Forex. So everything that I'm teaching you with index futures, you have to look at it as a minimum range of, can it move 10 pips? 10 pips has to be. If it can't move 10 pips, then I wouldn't even consider doing anything with it, because you have the spread, the dealer spread going in and coming out. You don't have that so much in index futures, and everybody's price is the same. You don't have that with Forex. Everybody's quoted high on Eurodollar, or any time frame is going to be slightly different. It's not consistent because you're trading in your broker's liquidity pool. In futures, you're trading in the liquidity. There is no outside sources. This is it, which is why professionals go there. That's why large firms execute in those markets, because they're not going to have the same funny money games that Forex has and crypto has. Okay. Let me check my notes real quick here. So by looking at having a very small window of expectation on what you should be trying to pull out of the marketplace, that being 5 handles. If we go through this process and you take 3 months and you can't get 5 handles, but you can show a record of you doing consistently 3 to 4 handles each time you do it. You're not there at 5 handles, but you're able to go in there and see when it's going to likely move in one direction or the other. And you can time it with a small time frame, because if you can time it with a small time frame, you can time it with a larger time frame. The larger time frame just takes more time to deliver it, but it's the same thing, because price is fractal. It's the same things that are occurring on these small 1 minute and 5 minute charts are occurring on weekly and monthly charts. It just takes a whole lot more time. I don't have the patience for that. Some of you might have the patience for that. You may have the predisposition to do, hey, I can do a trade on a weekly chart. I don't want to go anything lower than a weekly chart. I don't know how anybody could do that, because that's an incredible amount of patience. I don't have that much patience. I can change my mind very quickly. I can have something distract me and take me out of a train of thought, and it takes me time to get back in sync. So if I'm a trader that requires just daily candles, and I get a news report or something happens and we break out into some kind of conflict in another country, or a scandemic breaks out again, something to that effect, all that stuff's going to take my attention and dilute it from what I'm trying to do in the marketplace, and I won't be able to focus. So because I am obsessively compulsive and I'm bipolar, I'm wrestling a lot of mental baggage, okay, that I can't fix. I'm hardwired this way. I can't fix it. So I found where I can engage, where it gives me plenty of opportunity, even if I lose my focus. Someone distracts me. My children distract me. I'm late to my chart because of something. I have to eat something, or I have to, relieve myself. We're all human beings. Something has you away from the charts and you can't be there. Okay, that's fine. A 1 and 5 minute chart puts me right back in sync with things, and I can find another setup. Every single 60-minute candle has an opportunity for you to trade that 2022 model. What? Yeah. During those times, I've taught you to focus on, not every hour, during those hours of 8:30 to 9:30 to 10:30. Every hour candle, if you strip that down to 15-second candles, that 2022 model exists there. What? Yeah. There's there was a children's movie my youngest son drove us to a couple years ago. Dr. Seuss. Something, the fact that like there was this elephant or whatever, at least it looked like an elephant, and they lived in this world or whatever, and he heard somebody talking, or these little characters talking in this flower or something. The memory is vague, but I remember when they zoomed into this world, it was a whole lot of things going on inside there where it's microscopic. Well, if you're looking at an hourly candle, and imagine that you had a microscope and you drilled down into that 1 hour candle and how much movement took place inside that 1 hour candle, and you look at it through the lens of a 15-second chart, That 2022 model is there every single hour. The fluctuations are not going to be monumental, but that same thing can be programmed and coded as an algorithm that fires just like that, autonomously. Your perception of price is so heavily taken out of focus with the books, the logic that people teach you, that don't know how price is really going to book. They have no idea where it's likely to go next. And the evidence is how they're trading. Like, I watch live streamers just because I want to see when I see their expectation on a marketplace opposed to what I'm expecting price to do. I have a 90% edge that my setup at that moment is going to work at that time. Now, when you hear that, that sounds like you're a jerk. You're arrogant. Listen to what you just said. You're shitting on all these live streamers. No, I'm not. I didn't say one live streamer. I didn't specifically name anybody. There's 7 of them that I follow. A couple of them are just very inconsistent. Some of them are consistent. But collectively, when I have all of them, when all of them are looking for something and they start using keywords like, there's no way, or I think it's really gonna, when they start using descriptors, I'm listening for that. They're on very low volume when I'm looking to do a trade. And when I hear all of them start chattering the same way, oh, I think it's going to go down, when I'm looking for the buy side liquidity. And when I see a fair value gap or institutional order flow entry drill, or it runs sell side on a 1-minute chart or a 15-second chart, and they're saying that very thing at that moment that they're expecting it to go down, oh, it's going to break here. Watch this trend line break. Watch this descending triangle. It's going to go this way. All the moving averages are pointing down. That's exactly what I want to hear. That's exactly, because it's like, that's it. I have that very moment encapsulated in time where smart money is arm wrestling neophyte retail traders' logic. That moment, that very, very instant, you're in a 90% bracket right there. So it's frustrating. And I know I'm going to be frustrated because some of you are going to do things that you're told not to do. You're going to do things that you were never told to do. And you're probably going to hurt yourself this year. And I want to remind you all, that's your fucking fault. That's your fault. You did that to yourself, because there's nobody's ever going to say ICT caused me to lose money, because I've always taught in a paper trading account or a demo, and they're in a fucking court anywhere. They're going to say, oh yeah, this demo trader, this demo trade, this concept in a demo trade caused you to lose money. You took the initiative to push a button, and I'm telling you, don't push a fucking button this year. Don't. Learn how to read price. Learn your own tendencies to be impulsive. That's going to be a painful lesson for you. What's impulsive mean? Gentlemen, you're walking next to your girlfriend or your spouse, significant other. You're walking, and all of a sudden, out the corner of your eye, Miss Everything, Miss Thang, dressed to the gills, beautiful, lovely. What's your eye do? Look over. Now, you know at that moment right there, you better get your shit fixed real quick before your significant other catches you looking. But no, what do? You make sure the coast is clear, then you look back again, and then now you're undressing her. That's impulsive. That's the thing that you know you should not do, but you fucking did it, didn't you? And you might get away with it once in a while. You might get away with it at that instant. But if you live your life like that, your significant other is going to catch you doing that. And what do you think they're going to say? Now, if you're in a long-term committed relationship, they're going to let you nudge you with their elbow. What are you doing? You can't get that. But if you're in a young, new, fledgling relationship, and you haven't really committed yourself either party, and it's something new and fresh, you're going to feel insecure if your significant other is looking at someone else like that and gawking. because you're going to think, oh, they're looking somewhere else. The grass is greener on the other side. That's impulsive. How's that related to trading? Well, ICT said that he thinks it's going to go up to 4,030. And I'm in front of the charts right now, and he's need to mention that fair value gap. So that's pretty much like him saying buy it right now. So even though he hasn't said anything about really technically buying it, and he hasn't really said where the stop loss should be on this particular fair value yet, I've got pretty good feeling that the grass is greener right now. If I just go in there and just do one contract, just buy one contract, and if it goes up to 430, I won't say nothing. He'll probably think it's funny. He might like my post if I say, I know I didn't listen, boss, blah blah blah, and I made that 430. High five every week, every day, and won't stop. No, that's impulsiveness. Okay. You do the things I tell you to do. You don't do the things I tell you not to do. Focus on the things I'm telling you to focus on and nothing else. If you just follow that going through the rest of this year, you will get the understanding that you need to do it independently. You'll know when to do something, when not to do something. You'll understand how to place a stop loss. You'll understand what it feels like to get in there doing it and desensitize yourself. That means remove all that fear and anxiety that you're feeling about doing it incorrectly. You're going to do it incorrectly, but that incorrectly done process doesn't always equate to failure. What causes failure? Repetitively going in, fixing what you think is an error. It's just a transaction that didn't pan out. And it took something away that wasn't a deposit in money, a loss of time. You're going to see, we're going to be in moves, and this will be a hypothetical. This is where your stop would be. I'm not going to push the button. There won't be a hard stop there, but I'll be communicating where I think it should be. And the market will go down to that level. Okay, well, if it's at a point at which would be break even, you got to think about what that felt like to be in that trade, have unrealized profits. You haven't got out of the move, but you're seeing it. It would be 4.5 handles, maybe 8 handles, maybe 10 handles. And if you didn't take a partial, or if I don't indicate there was a partial to be taken, which isn't going to happen because at 5 handles you're taking it, this whole time investment will feel like a waste if you've done nothing but get break even, which is the actual lesson in that. You need to take partials. If I'm teaching you, your threshold should be aiming for 5 handles. Doesn't it go without saying, if you're watching something, if it goes to 5 handles, you should do what? Initially, square the position off right there at 5 handles and just watch, does it go beyond 5 handles? And you're going to feel all this impulsive behavior start to well up inside you. Oh, I shouldn't have done that. If you're trading with a live account, following along in the commentaries I'm going to do in live streaming, you're going to feel like, oh no, I shouldn't have listened to ICT, that fucker. He told me to get out of 5 handles. Look at it, it's like 30 handles. What did you learn there? Greed. And it's going to build in the building blocks of fear of missing out on that next big rip. Instead of just saying, I was looking for 5, it gave me 5, I moved to the sidelines, and now I'm going off to go spend time with my kids, go watch a movie, I'm outside, I'm doing whatever I want to do, take a drive in my car. I'm on vacation. I got this one in, and nobody knew about it. It's done. I'm not condoning vacation trading, by the way. Every time I do it, I hate it because it ends up coming hours and hours and hours in front of the charts. And then my wife says, you weren't supposed to bring that. You said you weren't going to. I know. I'm sorry. That's like that analogy, the wandering eye. These charts, I'm sorry, they're all beautiful. And I live a monogamous life, but as a trader, my eye, it just lingers. Okay. And in the charts, I'm going to see a hottie. Okay. I don't see numbers in candles anymore. I just see a brunette, a blonde, a redhead. No, I'm just saying. I'm just being funny right now. My wife is the only one for me. the wandering eye scenario will get you hurt in trading. Okay, so I want to make sure that you all go in with the right expectation, the mindset, the focus, and by doing it this way, it's going to be boring in the beginning. But once you see how we can see these things panning out every single time, it's the same fucking shit. It becomes entertaining. It's almost like the book you've read multiple times. You know the plot, you know the character engagements, and you know how it's going to end. Now, that same book that you read over and over and over again, you give it to your kid, or your dog gets a hold of it, chews it up, rips a couple pages out, or spills coffee on it, and you can't read a certain paragraph. Do you lose resolution if you go through that book and can't read that 1 or 2 paragraphs? You lose a little bit, but you are familiar. You still know what is likely to occur. You've been there before.